Hey everybody, I hope you're doing well and that your 2023 is off to an amazing start. I'm Jacob, and in this video I'm going to show you how my stock portfolio performed over 2022, share all of my dividend income for December of 2022, and give you some insight into some of the investments that I'm planning for 2023. Before we hop into this portfolio, I think it's good to take a quick peek at where we are right now from a macroeconomic perspective and just sort of highlight what's been going on throughout 2022. And the first thing is inflation went out of control. Back in 2021, it was pretty low at about 2%. And then throughout 2021 and 2022, it actually increased all the way up to about 9% at one point. And I think a large reason for that is because, well, at least in 2021, you had the supply chain crisis, which of course slows down production and really just causes delays for a lot of goods. And then 2022 rolls around, and of course you have the Russian invasion of Ukraine. So with that, everyone gets in a panic, oil prices go up, inflation goes up, and in order to combat that inflation, the government increases interest rates. So if we look at the federal funds rate in the United States, back in January of 2022, it was 0.08. And then after Russia invaded Ukraine, it just shot straight up. And right now, at the time of this video, the federal funds rate is right around 4.5%. And with that, you saw the financial markets take a pretty steep decline. The S&P 500 down 20% this year. Tech stocks especially took a beating. The NASDAQ is down 33%. If you look at the crypto market, Bitcoin is down 65%. Altcoins down 80-90%. So from an investing perspective, it's been tough. And although it's been tough, it's nothing out of the ordinary. Throughout the entire history of the stock market, there's been down years. Here's a graph showing the returns of the stock market every year since 1929. Of course, you had the Great Depression in the 30s. You had a few bad years in the 80s, the housing crisis of 07, 08, the dot-com bubble, and now in 2022. And even with all those down years, the economy has a lot of good years as well. Companies are resilient, they're innovative, and while there's events that are obviously out of their control, like war, those macro events are obviously not going to last forever, and the ship will turn around. When? That's the big question mark. So I guess my point is, don't lose faith if you had a really bad year. Over the entirety of the stock market, the average returns are about 10%. So if you have a long-term lens, you'll be just fine. All right, so diving into my portfolio here. Right now, the value is about $27,800, an overall gain of $4,400, and that puts us at a return of 30%. But if we look over the past year, we are definitely in the red, down about $2,300 or a return of negative 8.5%. So compared to the overall S&P 500, which a lot of people use as the benchmark, I actually outperformed that because the S&P was down about 20%. And here I'm down 8.5% on the year. Of course, here in M1 Finance, you can build your portfolio out of what they call pies. So I have mine arranged by sectors. And here we can see that a majority of the sectors are in the red, and there's a few that are in the green. Of course, technology got absolutely destroyed this year. Good quality companies like Apple, Microsoft, down over 25%. You look at something like Asana, down 82%. Just shows you that tech had a really rough year. But some positive things to highlight are healthcare, industrials, and energy. We'll just pop into healthcare real quick. Companies like Johnson & Johnson, Eli Lilly, and AbbVie really outperformed the market. Industrials like GPC and Caterpillar performed really well. 3M had one of their worst years ever. And lastly, the energy sector. Of course, we had the war. Oil went up, and with that, companies like ExxonMobil and Enterprise Product Partners, they did really well, especially ExxonMobil, 88% on the year. I mean, that's just absolutely crazy. And really, that just shows you why it's good to diversify, because when you have a year like this where tech gets absolutely destroyed and it's down, 37%, you have sectors like energy that help balance that out so the loss isn't as bad. So that's how my portfolio performed over the year. If you do want to dive a bit deeper, I'm going to leave a link below in the description. It's from M1 Finance, and none of this is telling you to either buy or sell. This is just me showing you sort of what I got going on in my portfolio, because I do like to be transparent, and I'm sort of running a really long-term experiment here to show you that if you do choose good quality companies, you can achieve financial freedom. So with that, let's pop into the dividends here to see what we got in December of 2022. Well, starting off, we got $11.22 from Aflac. Johnson & Johnson paid $5.87. $1.34 came in from Microsoft. Again, Microsoft is a high growth, low dividend payer, but definitely a good quality company. When you look at the products that they have, you would probably consider them a company that has a fairly wide moat, which is really what you want as an investment. You want companies where it's hard for competition to make their presence felt. And although that is rare, Microsoft definitely feels like one of those companies. ExxonMobil paid $3.40. Healthcare company Eli Lilly, $1.81. 3M, again, had a really bad year, but they do pay quite a nice dividend right now, and that dividend paid $3.93. Coca-Cola, another company you could consider as one that has a nice moat. The beverage industry is basically an oligopoly. You have Coca-Cola and PepsiCo. Nothing too crazy in terms of growth, but Coca-Cola is a steady dividend payer, and this month they paid $2.84. Consolidated Edison, 89 cents. Home Depot, a store that I've been frequently lately as I've been getting into a woodworking hobby, but that one paid $3.81. $3.06 comes in from McDonald's. Realty Income Corp, a monthly paying company, they brought in $5.90. Similar to Realty Income, Stag is a monthly paying REIT focused on industrial properties, and they paid $2.63. Waste Management, $1.98. Vanguard's high dividend yielding ETF, VYM, I got a paycheck of $6.53 from them. BlackRock is an investment firm that has one of the largest assets under management, and this month I got paid $7.52 from them. SPHD, this is a monthly paying ETF, $7.23 is what they brought in. Nike paid 88 cents. Vanguard's VTI ETF, which is essentially comprised of the entire stock market, low cap, mid cap, large cap, $10.89 is what I got from them. Broadcom, a chip manufacturer, I put this in my tech pie, and it was in the red all year, but performed a lot better than your Googles, your Amazons. They paid $5.97. And then to round everything off, we got $5.83 from Brookfield Infrastructure Partners. So when we add up all those dividends, that comes to $93.53, which of course is my highest paying dividend month ever in this portfolio. So that's really good to see, especially compared to this time last year where we got $71. So that's about a $20 increase. And overall on the year, that puts us at $759.22 for dividends earned. And I do have a few graphs over here on the right just to show the different years that I've been investing. I started in 2020. I break it out by quarter. And I also have every month on this graph here. And it's pretty obvious that the trend is moving upwards. And a big reason for that is because of the compound effect. So what I'm doing to increase my dividends year after year is I'm investing every single month. So I have constant cash flow going into my portfolio. I reinvest all these dividends, so I don't cash them out. I just keep reinvesting them into my portfolio. And you can think of that as interest on interest. But then the third part is that a lot of these companies, they increase their dividends year after year. So it's really a trifecta of things happening here that's causing these dividends to increase year after year. By the way, if you want this spreadsheet to use for yourself, I'll put a link in the description. You can just make a copy and put it on your own Google Drive, and hopefully it helps you out. Now, in 2023, I told you I'm going to give you some insight into my investments. Well, really my strategy is I'm going to hold the same companies and I'm just going to keep reinvesting. I really do feel like that all of the companies that I currently have are quite strong and I want to hold them for the long term. A couple companies I've been considering are FedEx and Altria. Again, two companies that I feel have fairly good moats. I just have to do a little bit more research before I actually pull the trigger. I would probably do FedEx before I did Altria. Just because I'm a bit younger, I don't really need the big dividend that Altria is paying out right now. And I'm also going to be building up a cash pile because I am getting married this year. So I sort of have to save up and pay for the wedding. So that's what I think 2023 is going to look like for me. Let me know in the comments below what you plan on buying this year. And with that, I'm going to wrap this video up. If you did enjoy it, please hit that like button. It really helps me out. Subscribe if you want more videos like this in the future. And I hope you all have a wonderful 2023. Take it easy, and I'll see you in the next one.